This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Illustration 1 will help us to understand this information a little bit more. You're unlikely to get a large SBA question in the exam. It's more likely to be a multiple choice question where you're perhaps given 4 or 5 different pieces of expenditure regarding the building. One of which may be plant and machinery, one of which may be land, and you've got to determine which of these are qualifying and multiply it by 3%. And don't forget the rate of 3%. You don't have to remember, it's in the tax rates. So let's have a look at this illustration. A trader prepares accounts to the 31st of March and on the 31st of October bought a new warehouse from a builder, costs $240, including land that you can't have. Now it was used in the trade from the 1st of January 2023. We talked about that just about. You've got to wait till it's brought into use. Now the qualifying expenditure is only £150,000 because obviously you can't have the land. And the SBA of 3% is only available from the 1st of January. So for the year ended March 23, it's 150 times 3% times 3/12, 1,125. Now, the full SBA can be claimed the following year, which is 4,500. On the sale of the building, there's no balancing adjustment for the vendor, the person selling. This is the person selling. Okay. But instead, any allowances claimed are added to the sale of proceeds of the building and in computing any capital gains or capital losses. The SBA again will be time apportioned in the accounting period up to the date of sale. So if they sell it part the way through the year, 3, 6, 9 months into the year, they can only have the time proportioned. So this is the rule of how you would deal with it when it is sold. Let's have a look at the second illustration. So we assume that the trader in illustration 1 continues to use the building in his trade until September 24, at which date the warehouse is sold for $300,000, including $120,000 for the land. So we're going to see what that rule that we've just looked at, how that affects the computations. So the trader will claim the following. Now we've done that first bit, so these two are as above. Okay, that's a repeat of what we've just looked at. Now, in the year to March 2025, which includes September 24, they've sold the building. So we can have the written down allowance, but only for 6 months. So that is what we can claim, and that's the total allowances that we have claimed. Now, chargeable gains we're going to deal with later, but the basic calculation is proceeds less sale costs equals gain. All right. So a gain would be the £300,000 that they got for it, plus those allowances. That's what the rule said. If you go up to here, on the sale of the building, no balancing adjustment for the person that's selling it, the vendor. Instead, any allowances claimed are added to the sale proceeds of the building. That's what we're doing here. We've added those two together and then taken off the cost, what we paid for it. So that is a chargeable gain. It will make more sense when we do chargeable gains later. So the trader buying the property, so if somebody's bought this property, will simply continue with the same 3% claim, which is £4,500. If the buyer prepares accounts to the 30th of June and immediately bought the property into use on the 1st of October, then it would have purchased it part way through the year and would only get 9/12 of that written down allowance. I think you're getting the idea of that. Then they'd be able to claim a full year in the following year. Okay. So again, small, this structures and buildings, you're going to get a very small question, I would think, on that. It's never going to be a full computation for a lot of marks. So it's something to be aware of, but it's not as important in your knowledge layers as the capital allowances computation.